Hello, everyone, and welcome again to my YouTube channel. Don't forget to subscribe, like, and share, and follow me if you enjoy watching this. What can I invest in, and what age can I start investing? What age can I start investing, and what can I invest in? On this channel, when we talk about investment, we're talking about owning a property, owning an asset, owning a share of a business. That's the conversation we have on this channel. So if this is what you're looking for, then you're at the right place. What age can I start investing? As long as your legal age, which is in the UK is 18, then yes, you can start investing. But you have to do your due diligence and find out what exactly you want to invest in, because there are so many products on the market. So you have to decide what you want to invest in. As we go on, I'll talk you through some of the products available and some of the pros and cons you might use to make your decision where you want to invest. In terms of the age limit, there's no maximum limit when you can stop investing. You can invest until you die. The fact is, you have to have a purpose for which you are investing. Having a pension is all part of the investment process. So yes, buying property is all part of the investment process. So what are you investing in? Are you investing to build generational wealth? Are you investing for your old age? Are you investing for your children, or for your children to be able to bury you when you die? That's the conversation most of us don't want to talk about, which I'm talking about life insurance. But yes, the products, they're there. Some of them might be comfortable for you to discuss, others not so much. But we have to change the narrative and talk about any products available to us, whether we like it or not. At some point in time, we're all going to die. So life insurance conversation should not be, thrown to the dust as if it doesn't exist. We need to start looking after ourselves and our children for when we're not around. Because if our parents had done the same for us, I'm sure a lot of us will be in a better position. My parents are still alive, so I'm not going to say that. But I'm sure some of you would have wished for your parents to have done that, because that probably would have set you up for a better life. So why don't you look at the same option for your children? Because it can be of a great benefit if you look at these things. But now let's talk about some of the immediate investment opportunities available to us. We can use some of them as a means of creating our own financial independence. If we're looking to generate passive income, yes, something like stocks and shares is one of them. Because when we talk about stocks and shares, we're buying stocks and shares from companies. Doing your due diligence, you might opt for a reputable companies, like some of them I've mentioned here several times. And I'm not your financial advisor, so if you're seeking any sort of advice in terms of which stocks and shares you should buy, I would advise you to go and see your financial advisor. But I do offer programs where you can attend to learn the basics of how you will be able to invest. I'll teach you some of the technicals that you need to understand, some of the things, the fundamentals that you need to look out for in order to start your personal journey that would help you manage and control the risk involved when it comes to investment. But all these things I teach in my programs. But to go on further, when I talk about stocks and shares, yes, you can buy shares from any company. That makes you a shareholder of that company. That means you own part of the company. Depending on how much money you invest in that company, you become a shareholder. So if you have 10 shares in a particular company, you have 10 shares in a particular company. But what happens when it comes to passive income? You might get dividends on a monthly basis, depending on what company you invest your money in. So if they provide dividends on a monthly basis, you will get your monthly dividends. Not every company does that. There are ETFs that manage properties, commercial properties or residential properties. you will be able to get dividends from these companies, depending on how much you invest. Secondly, some of these big companies as well will give you dividends, maybe 6 months, a year, and they can't defer it for as long as they want, depending on, as I said, on what company you invest in. So do your own research, and you might be able to get some monthly returns in terms of from a passive income basis. But some of the risk involved when it comes to investment is the value of your shares can go up or down, but not because the value of your share has gone down means you're not going to get your dividends. You still have your shares, the same number of shares. So whatever dividend is being given out is based on the number of shares. So if, for instance, well, Facebook, let's use Facebook as an example. If Facebook offered to give £1 per share and you have 100 shares, you will get your £100. If it's 50p per share and you have 100 shares, you will get your £50. So yes, that's how it works. Those are some of the benefit. But the downside is, as I said, is to do with the value of your shares. But not so much of a worry if the company is, the company has a long-term potential to grow, and in the short term the share price goes down. You still have your assets. So in the long term, if the company grows and your share price goes up, that's another benefit that comes with owning a share of that company. You can also invest in properties. And talking about properties, that will depend on whether you have the large sum required by the bank in terms of deposit, or you have another option within the same investment where you can buy, like the ETF I said, shares in companies that manage properties. So you can invest in those companies and they will manage your investment for you. They normally invest in residential properties or commercial properties, but that is within the stock market as well. But here, when I talk about property, I'm talking about you owning your own property, whether it's a residential property, you're getting a mortgage, you put down a deposit. If you have the deposit, that can generate some sort of income for you as well on a monthly basis. But a lot of the time is the deposit that people have issues with, having a large sum of savings to put down in terms of the value of the property and how much deposit you have to put down before the bank can give you the mortgage, and then finding the extra money to redo the property and make it habitable for anyone you're renting out to. That's another option. Buying your own property and renting it out is another way of creating a passive income for yourself. And in this case, you don't only benefit from the rental income, your capital growth is also an advantage, because over the long term, which is what investment is about, you're looking at a long-term project. So over the long term, the property increase in value, so you're more likely to earn extra money from that as well. So you're not just earning in the short term in terms of your income from rental, but the growth of the value of the property is another advantage. Some of the issues you may have is, if you end up with a bad tenant, that can also cost you. So it would be very important to make sure that you have home insurance that covers some of these things when it comes to tenancy not paying rent, damages to the property. You can also look at bonds, which is a financial security issued by a government or a corporation that's looking to raise capital. So you basically loan them your money, and in return they promise you to give you your money back in a set period of time. You might be getting interest on a monthly basis if that's the arrangement, or at the end of the term you sell back your bonds to them and get your money back with interest. There's another one where you can do peer-to-peer investment, which is loaning money to individuals or businesses looking for for, you know, to raise capital. That's another way of you know, becoming financially independent and investing. Don't forget to subscribe, like, and share, and follow me if you enjoy watching this.